Hey everyone, welcome back to another video here at TrinFx YouTube channel. And as you would know it's a weekly analysis. And I'm sorry for my lack of participation right now on the YouTube channel. Not really much going on in the market right now, so therefore really haven't been much to actually post when it comes to market trend movement and any of the price actions that we usually do see, right? And this is atypical for August month as we step back into a sense of normalcy after COVID and all of these other wild transactions that we had during those 3 years period, right? From 2020 all the way now to 2023. Things have calmed down a little bit. Obviously, we still do have a lot of things going on worldwide that affected markets, but for the majority of the things that will cause a market movement during this course of time, it has been a little bit more settled. So with that being said, not really much to report in market movements for the August month. It has been a very trying month for me personally. And in order to combat that, I really did have to take a step back from the markets. All right. Now we are in a new month. It is the month of September. So ninth month, almost coming all the way to Christmas again. It feels like January was just the other day. Um, so that being said, guys, we're going to dive straight into the market, see what sort of setups we could get right now, as well as what price action movements we could expect, right? So starting off with the fundamentals, as you guys know, I like to start with the fundamentals always. Um, for the week, we don't really have much coming up except some USD news. And we also have starting from the Tuesday, which is really where we're going to start seeing the majority of heavily impactful news. We have the RBA interest rate decision. So this is one of the first things that we do have coming out here, expecting it to remain the same. All right. Now, this right here, as you would know, there's usually some discrepancy between the previous and the consensus and the actual amount, right? Sometimes the consensus and the actual don't really line up. But for this particular news event that we do have for the RBA, I do think overall we should see interest rates remain the same. And I think this is something widely expected. Now, the reason for this, obviously, have other economic factors affecting this, such as China, what's going on with China's economy, GDP, and whatnot. As you would know, if you don't know already, China, the Australian economy, do a lot of trading in between with each other. And therefore, when you do see an impact being hit on China's economy, that could dwindle or that could lead into a negative impact on the AED as well, right? So a lot of things really are affecting the AED dollar right now. That being said, interest rates on itself should remain the same. There shouldn't be any increase, especially with the lack of GDP growth and other unemployment factors and whatnot, right? So we do have a lot of key factors indicating that we should see interest rate remain the same at what it is right now. So for that, I am looking for some AED sell side setups, and I'll show you guys that just now. During the course of the day, on the Tuesday, we do have some more impactful news for the euro area. This being the only particular one I'll pay attention to, not the other countries that make up the European area, just this one, right? This is the euro area, a generalization. So this right here will be a number that I think would have an impact on the euro dollar. Now, I'm not gonna be too hasty when it comes to actually trading any of these currencies right now, because we now start the new month. We got to ease into it, recover from the losses of last week, and then depending on how the month goes, we might see some movement, we might see some volatility. Things starting back up right now. As you know, summer vacation, not really much market movement there, but at the month of September, October, November, usually we do get some volatility. So we'll see how things go, right? So I would advise you guys to actually take things really slow right now. Take your time and don't try to rush the trades, right? As traders, sometimes we do get a little bit agitated when we don't see a setup for a long while. And displaying patience is really one of the key qualities that will help you as a trader. We also had GDP growth coming out as well, and looking to see a slight increase, right? So not too much of a movement in terms of GDP growth here, just a slight increase. So I don't think we should get much AD bullishness as well, right? So I am still AD bearish right now. Wednesday, we have retail sales for the area year to year, right? Expecting a slight increase, right? So from negative 1.4% to negative 1.2, right? So that is a slight increase. We'll have to see what the numbers do come out as. Now, the other factors that we do have for the area really aren't that great. So what numbers we do get here, obviously, we can't make any sort of prediction that'll be like 90% sure, any sort of surety. But I would be expecting a negative number to be displayed here on the actual. All right. Besides that, we also have S&P Global Services PMI. So this is a number that really would affect indices coming out. We have BOC interest rate decision, right? Looking to remain the same. Now from the Bank of Canada. All right, this we could actually expect to see a surprise here, a slight increase of 25 basis points, right? But for now, what we do have going on with Canada's economy, there isn't really much to say in terms of the way of negativity. It really is sort of in a neutral state right now. So we could see a slight increase, maybe to 5.25%, or we could see it remain the same. All right. So we'll just have to wait and see what the number does actually come out as and what sort of market movements we do get. Maybe at this point, we may get some deviation between the Canadian dollar and the US dollar. We also have ISM Service PMI for the USD. And then we have some talks, right? So we have BOJ, Nakagawa speech, and we also have RBA Govlo speech, right? So these would impact the dollars, the currency for themselves, right, of each economy here. So for the yen, this speech should display some sort of impact on the yen dollar, and for the AED, same thing here for the Aussie dollar. Sorry, my wrist is paining really bad. Like Thursday, unemployment rate for the CHF. I say I actually mark all of these up already, so I do have an idea of what to look out for, what I'll be, probably trying to take advantage of when we do have news coming out. We also have GDP growth for the euro area. So you can see here a slight decrease. Okay, so really not that we don't have any bullish sentiment right now for anything right now, right? Any of these economies, not really much of a bullish sentiment. And the thing is, right, as a trader, you'd actually be thinking, okay, so we don't have bullish sentiment. Well, which one should you trade, right? What should you sell? What should you buy? And that is the difference in the win relativity, like in terms of the relative power of each asset, right? And then we have jobless claims, expecting to see a slight decrease, right? So decrease here on each jobless claims, which is good. So we'll see whether that number does come out as true. If this number does come out as true, guys, we're going to see a very drastic move on the DXY for the dollar. Right on Friday, we have some more Canadian news. Unemployment is really what I'm going to pay attention to, and then the employment change. All right, you can see the previous was negative 6.4, and the consensus here is in the positive zone 15. All right, so if we do get something higher, also we could see an increase on the Canadian dollar. All right, so these are things that we need to pay attention to, and it really set the tone moving into the new month. All right. So one thing that I'm looking at right here, and I'm trying to take advantage of, is this trade on GP80. Now, GP80, I am expecting to see price move to the upside. Overall, this is a swing trade, a longer term held trade. And you can see just like the value here, right? The pip value here is 402 pips is my target. Now, with that being said, I do check it as percentages overall, and I am expecting to see that increase when we do have the interest rate for the $80 coming out. Now, if it remains the same, then that should help with price moving higher, as that indicates that, okay, the RBA is no longer right now looking to increase rates. What that means for the future, what that means for the current settings for the RBA. All right, they're not seeing what they want to see in order to increase rates to reach their target, right? So this is something I think they could take full advantage of, especially here on the technical level. This swing full, right? This full swing here. So this is one trade I'm looking at. I'm just going to run through these quick because not really much to talk about in terms of market movement right now. DXY, take a close look at the DXY. So DXY, you can see that price did reach into this level, and let's just go to daily. So we have this daily structure level right here of resistance. Price rejected from this level multiple times right here. So to the left, we can see multiple times price did come into that area, we rejected right in that general zone, right? Pulled down, came back up here, rejected really strongly the downside, and we kind of continue in that sort of rejection from here. So prices having a hard time passing this level. Now, leading into this week, however, right, we do have some USD news that we need to pay attention to, obviously. And this large move to the upside here was on NFP day. So NFP did come out a little bit positive, right? We saw price actually swing to the upside here in favor of the dollar strength. Moving into today and, well, this week into the month, we have interest rate decisions to look out for. All right. The Fed has been tightening on increasing rates rather rapidly. Still, they aren't at their target really, right? So they still have just a tiny way to go until they reach their target. Now, with that being said, there were speculations that the Fed may start to actually stop raising rates, right? The projections that we did have in, I believe it was July month. I think it was July month. The projections we had in July month, right, when we saw a huge rapid change to the upside for the dollar, was that we're going to see an interest rate increase at least twice again for the year, right? So 2 times again we'll see an interest rate increase for the US dollar, and we already got one, and now this is the second one that we're waiting for in September month. Now, since then, there has been speculations that, okay, maybe we might see rates not actually raised this time again, just because of what's going on and what the Fed, they aren't seeing what they want to see in order to increase rates and the drastic change and whatnot affecting labor markets, so forth, so forth, right? It's really a balancing act right now. So obviously, all of this is just speculations. We can make our predictions and our probabilities as maybe we might see rates not rise. But until then, I do think that we may start zoning, right, in this general area, right, before we get any major move either to the break to the upside or to the downside, right? Today has been sort of slow because of it's a holiday in the US, right? So it's a US holiday, Labor Day, right? So not much movement here. And that may speak for the continuation of this week. However, again, this is all speculation right now. We need to see some sort of catalyst in order to make our bias be more firm, right? So this is just my take right now on the DXY, what I'm expecting, just sort of like a consolidation until we see some major news. Maybe at the jobless claims, if we see that number decrease, we might see price increase here. So yeah, that's it for the DXY. Not really much going on in markets right now. Pretty quiet. All right. So another thing I want to take a look at here is gold. Everybody favorites. So I'm going to the favorites right now in the Forex community, right? So gold, indices, these are the things that people like taking a look at, commodities. Looking from here to the daily, so we're gonna do a top long analysis from the daily, go down to the 1 hourly, right? I usually do go beyond the 1 hourly to like 30 minutes, 50 minutes, or anything like that. It's really unnecessary. Now, with that being said, here on gold daily level, we could see that we reach into this area, general zone, rejected multiple times here. So we had 4 times here rejecting on the past recent days. All right. We can say that this is like a general area for gold on the daily time frame. It is decreasing, right? Gradually here. If you're a trendline user, this may be something that's appealing to you to help you better understand market movement. Now, with that being said, obviously the US dollar is the main focus here. I don't know. Again, we need some sort of catalyst. We didn't have any volume really for price to actually move. So with that being said, I do think, okay, if we're able to see price actually go below this zone right here, right? So if we see a breakdown here, then we might get a continuation into the next supportive level, which would be somewhere like right here, right? So this will be like one target area for me. All right, so if price does break the downside, we get a full close below this candle here, right? And let's just take a look at that on the 1 hourly here. Right, so a full close below this area here, then we could possibly see a continuation lower. Obviously, if we do see a continuation lower here, that means that we are getting dollar bullishness, and that is something we could get when we do have volume and volatility kicking in for the New York session trading, right? And this would be the target area where we did have the NFP. Was it NFP here? No, I don't think this was NFP. Was it NFP? Let's see. Actually, this was on the 29th. All right, so this was just the day before NFP. I can't remember what sort of news we did have here for price move like this, but we did have price moving up here like very strongly. So this would be target level. Maybe we get a correction back into this level here, and then afterwards we might see either price reject, continue back upwards, or actually pull further downwards into this overall level here. Because if we take a look from the daily time frame, we are in sort of still in a bearish trend, right? So this is something that any long term, maybe a swing or sort of setup, right? Besides that, nothing else to really pay attention to. Markets are pretty quiet. Now we did have these large movements, the upside for the indices. However, you can see the price consolidation right now, so we really can't say much into what to expect from markets currently, right? New month, new opportunities, new possibilities, new set of catalysts that we need to pay attention to in order to actually, trade profitably. All right. And after the whole debacle that we did have with my Forex funds, everybody should be familiar with it at this point because it was pretty big. Everybody in the trading space should know about it. My Forex funds and what happened with them and all that drama really shook the Forex industry, right? You see a lot of these other platforms that actually start changing their website up a little bit, being more transparent as to what they're offering in terms of stimulated capital and not real capital, and all these other sort of arbitrage wording that they would have used just to like elicit that sort of realism, right? That sort of like making you feel that, all right, you're getting funded 100K account, you get 100K account, you're getting funded $100,000, which isn't real, right? You get funded like if there's a drawdown of 10%, that means you get funded basically $10,000, right? That's 10% overall. That's basically what you paid for a funded account of $10,000 with the purchasing power of 100K, but still $10,000 is your like max, right? That you're able to lose out of that 100K. So a lot of these platforms have been actually changing the wording, being more transparent when it comes to that because of the crackdown that did happen with my Forex funds. And to me, honestly, guys, when I think about it, the fact that they're doing this, it shows you that there's a general, there's an understanding between these platforms, right? What they're doing, the marketing and all of that, they're all aware of the fact that it's false advertising. All right, it's false advertising, but because of it, it elicits, it appeals to the customers and it gets customers to buy and whatnot. And these sort of tactics that they use, like paying out with the failed challenges that a lot of people don't apply for because hardly anybody actually passes the challenges and are able to keep the accounts themselves, the live accounts, quote unquote live accounts, for a long period of time, right? So they usually pay the funded traders with the money from the failed challenges, right? The people that weren't able to pass the challenges and whatnot. Um, a business model like that, it really is sort of shifty in terms of the whole operations and whatnot. And yeah, a lot of them just start being more transparent because they don't have a choice. They could just become shut down. So this is something that really shook up the whole prop firm space when it comes to trading. And I saw a tweet the other day from My Funded FX, the CEO of My Funded FX, Matt, that said that when there's a demand for something, right? Usually people or companies, right? They come to meet this demand, right? So there's a demand for prop firms within the trading community, trading space, and companies came out to fulfill that demand. Now, fulfillment of demand is great and all, but transparency and having that sort of trust with the customers is what really matters, despite being okay. There's a new sort of way to make revenue for a business. It doesn't have to actually even be anybody that are traders or in the funded space that know about trading. They have capital, they have money, they start this as something that's beneficial to them, and so they do it. And that is what we're seeing now, and why we have so many prop firms popping up daily after daily, because there's a demand, ever increasing demand for prop firms for, because traders want to get funded, they don't have the capital to start their own personal account, or they don't have that much capital, right, to see the monetary gains that they want to. And nothing's wrong with fulfillment of demand, but that transparency is something that a lot of these companies don't display. So with that being said, guys, this is it right now. Not really much to watch or discuss. As the week continues to progress and the month itself, we may get better opportunities. We may have more things to talk about. But yeah, this is it right now. Market's pretty slow. Can't force anything, right? And yeah, we just have to take it step by step, display some patience. Maybe this might be it in terms of the trading year. All right. Maybe next year we will have to wait until January to really, step up our game and whatnot. But yeah, that's it, guys. So thank you very much for joining in. If you found this video informative, educational, you learned something out of it, then feel free to leave a like, comment, share, as well as subscribe if you're not already subscribed, and turn on the post notifications to be posted about when I do go live. Can start back the live streams as well as things pick up. I don't like wasting you guys' time, so if things pick up, we'll do a live stream. If not, then it's not gonna happen. I'm not gonna sit down here and talk for an hour when I could do something else productive, right? So that's it, guys. Thank you very much. Peace.